Good morning, everybody. We have a mostly higher grain trade here on Monday morning. It is 6:30 a.m. Central Time. May corn futures up 3 3/4 at 5.49 1/4. May soybeans up 15.5 cents at 14.45 1/2. May Chicago wheat is up 4 1/4 at 6.57 1/4. May Kansas City wheat up 3 cents at 6.29 1/4. A couple of housekeeping notes this morning. Later today, or actually tonight, 7 o'clock p.m. Central Time, I will be running a live stream. This will be part of the ongoing Grain Marketing 101 series. The topic will be re-owning grain sales. This is a topic that a lot of different people have a lot of different opinions on. I will give you my 2 cents. We'll dive into the pros, the cons, some of the strategies that are involved, and should be good. The last couple times I've done these live streams, it streams live on YouTube and on Facebook, and then the recordings, of course, are available afterwards. But if you watch live, you can interact in real time. You can ask questions. I think I've answered every question that's been answered. That's been asked so far on these live streams. It's been a really kind of fun deal. So at 7 o'clock tonight, make sure you tune into that. I'll have the link on Twitter, and if you need the link, I'll send it to you. Just shoot me an email to info@standardgrain.com. And then, as always, guys, if you need some more help from me, go to my website. It is www.standardgrain.com. Go to the website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I will send you my morning email, which goes out every business day at 6:30 a.m. Central Time. I'll send you my text message service. I'll let you know exactly what I'm doing every day of the week. I get into a lot more detail than I do on these podcasts and videos. I talk a lot about grain marketing, everything from capture and carry to option strategies, all that sort of stuff. To get into the headlines here this morning, the COVID relief bill, the newest one, passed through the Senate on Saturday, and it will be headed to the House, where it will likely be approved tomorrow. The bill should be signed off by President Biden on March 14th, is kind of what they're looking at right now. The bill includes direct payments of $1,400 for most Americans, a boost to jobless benefits into September, and an extension of the child tax credit for 1 year. The package also includes $14 billion in support for U.S. airlines, among a whole bunch of other items. So there's a lot included in this, and I know that a lot of people have different takes on what's included and why it's good or bad or whatever, but that's the deal, and it probably did have a little bit of impact on maybe some of these markets. USDA will release its monthly crop production and WASDE report tomorrow morning. The March 31st report, the prospective plantings report, is of course the bigger report in March, but still, there's always the potential for a surprise when USDA decides that it's going to release a new set of balance sheets every month. Traders generally expect friendly numbers here. I'll talk a little bit more about that tomorrow morning, but it's an expectation for friendly numbers almost across the board. Weather issues persist in South America. Rains have slowed soybean harvest in Brazil. Rainfall in Brazil will be a little bit below normal during the next 2 weeks, aside from a few areas. So they're running a good 2 weeks behind normal. I think the number I saw was 37% complete versus 52 last year. And the gains that you're seeing in harvest activity week over week are fairly normal. So we're just behind. It's behind by a couple of weeks, and that's going to be the case. Still, just about every analyst out there is projecting a record bean crop out of Brazil. Argentina is dry. It will remain on the dry side for the next week or so. More normal rainfall is expected in the period from, say, March 14th to 20th. That could be a big deal if realized. Crops in Argentina expected to be quite a bit lighter than the records that were achieved in 2019. The U.S. dollar index traded its highest level since November of last year overnight. A rise in Treasury yields has, I think, maybe spooked some people out of the stock market and maybe back into some safe haven stuff like the dollar. You've got the yield on the U.S. 10-year Treasury was up to 1.55% on Friday. That's the highest since February of last year. So you're almost back to pre-COVID levels in the Treasury yields. Strong U.S. dollar, of course, typically a negative for any commodity priced in U.S. dollars, although you would certainly not know that by looking at the row crop markets. Crude oil traded its highest level since October 2018 overnight. The spot month April WTI contract peaked at $67.98 per barrel prior to a little bit of a setback. The big surprise last week was that the Saudis and other OPEC members decided to stick with production cuts despite rising crude prices. They made some comments regarding COVID and some lockdowns that are taking place in some parts of the world. So they're not ready to expand production yet, and that really took the trade by surprise, I think. Fund traders remain heavily along the grain markets. In corn, we've got what I would consider to be an extreme net long position. 331,000 contracts was the estimate at Friday's close. I mean, that's a level that's far above anything you saw in 2012. You got to go back to 2010, 2011. Soybeans funds estimated to be net long 156,000 contracts at Friday's close. That's a hefty net long, but we've been there several times over the years. In wheat, they've got a modest long. I'm going to put a chart on my screen here. This is the combined net long across corn, soybeans, and wheat. So you can this is the futures only version. You can kind of see where the funds stand here. I mean, they are very heavily long the grain complex as a whole. I mean, this is an aggressive long position. They were at this point once in 2014 for a period of time, of course, in 2012, and then 2010, 2011. So this is really, the third or fourth instance basically where funds have been this heavily long the grain markets. And whenever they have that kind of length, I would always make the argument that you've got liquidation risk should something change. I mentioned in one of the most recent live streams, as a matter of fact, somebody asked me, what do you think one of the big downside risks is in the grain markets? And my answer was that if you were to see some big time liquidation in, say, the stock market, like a real big time, like something like we saw, back February, March of last year, that could result in some liquidation here. I mean, they've got so much length. If the narrative or the story were to change, and I know the markets are invincible and everything looks bullish right now, but if it were to change, and things do change fast, I mean, look what happened the last 12 months. There's liquidation risk there, and that's been the case for months now. This is not any fresh news by any means. The cattle market ended with some marginal gains on Friday. Cash cattle trade really still kind of stuck in the mud here at 114. I think we saw some stuff as high as 115 on Friday. The boxed beef market was mixed to lower. Outside markets here this morning, we have the stock markets off. The Dow's only down 30 points. The S&P is down 25. They were higher to start last night, I believe. Precious metals are lower. We've got the crude oil, again, higher. It's only up 26 cents right now, 66.35 in the April WTI. But again, it did post fresh 2 or 3 year highs overnight. The bonds are a little bit lower this morning. Remember, guys, live stream tonight at 7 o'clock Central Time. We'll talk to you then.